Hello, welcome to another part of BadFalks. Today we want to go to a very important area that every trader should master. Identifying the liquidity of the buying side of the buy side and the selling side of the sell side. In Markle, Nawahi Nagangi is actually one of those scams that are used by the big actors of the market or the corporate tweeters. In order to manipulate the emotions of the market, one of the main reasons that harm many people is that they either don't recognize these prophecies correctly or they don't understand their importance at all. So, in this advanced part, we want to go to the psychology behind these areas, the candlestick patterns and perceptions that are usually seen in these areas. But most importantly, we will help you understand exactly how these methods work and how you can use them to protect your capital. Liquidity on the Proush side and the stock side are two of the most important components of a market structure. The price usually moves towards one of these sides because there is liquidity there. The market is always moving between the buy side and the sell side. If we want to say it more simply, it is a continuous cycle, or the price goes from the sell side to the buy side or vice versa. We can use this information like a roadmap for analysis and be one step ahead of the market and make clearer and more accurate decisions. Now, let's have a quick overview of these two areas and see what is the psychology behind them. Suppose the price has entered and the distance has accumulated as you can see in the picture. Before the beginning of the Saudi or bearish phase, the market forms a structure with equal peaks and equal bottoms. Igual highs and igual lows. In this phase we have a low structure level and a high resistance level. It is quite clear that traders are looking for buying when the price reaches the support level and naturally they put their stables below the support level. Well, now, since all stables from buyers are below the support level, a very strong liquidity of money is formed here. Also, a series of their own traders, who are waiting for the price to break the support level, put them below that level so that they can enter the transaction after the break. Why? Because they believe that if the support is broken, the market should be bearish and it will start falling. Now let's look at this scenario from the buy side. When we encounter a resistance level that is on two equal hertz, we understand that many of the traders are looking for a push above it, and naturally they place their stable blasts right above that resistance. On the other hand, some short traders are waiting to buy with a stop if the price breaks the resistance, because they expect that the price will continue to move profitably after the price breaks. These orders will cause a clear money liquidity to be formed above the equal highs and below the equal lows, where all the orders are waiting to sweep their market. So here we have a buy-side liquidity area at the top of the structure and a sell-side liquidity area at the bottom of the structure. In fact, both are the same in terms of concept, but their direction is different. Liquidity buy-sell is the area where buyers place buy-stop orders and sellers place their own stop above it. It all happens on the buying part of the chart. Sell-side liquidity, where the traders who have a long view put their strapless down and the sellers put their sell stop down there. That is, it all happens on the selling side of the chart. Now, let's see how the market reacts when it reaches this level of liquidity. Let's see that the price is moving towards equal highs, and small traders will start buying when it comes to you, and they place their stables above that resistance. Now what happens if the price pushes and breaks that resistance? First, the stables of those traders who were registered will be activated, which itself creates a buying pressure because the short positions are liquidated. The stop orders are activated to the traders who are waiting for the breakout, and these two together cause a strong buying wave to enter the market. These events cause a strong wave of buying pressure and create a series of infections or liquidity vacuum at the top of the structure. This issue makes many traders get excited and open new buying positions because they think the Saudi trend has gained strength. Now let's see how the market works. Every time a purchase order is placed in the market, there must be another person on the opposite side who is ready to complete the transaction and vice versa for the purchase order. Now imagine that a large financial institution like banks and mutual funds wants to buy a large amount of a currency. For this, They need a large number of suppliers in the market to be able to fill that large volume. And in the presence of suppliers, practically no transactions are made. This is where smart money comes into play. These should activate the pending orders that are in the market from the west, such as sublasses or stop bars that are placed above 100 key pillars. Because orders generalize their needs so that they can take large positions without moving the market too much. In order for smart main to be able to carry out his buying spree in the market, if his goal is to sell a large volume, there must be enough buyers in the market. Why? Because under normal conditions, there is not enough liquidity to complete a large sell order, and there may not be enough buyers to cover all their sell orders. In such a situation, it is usually thought that money and intelligence manipulate the market by creating scenarios that deceive their traders, the way that the trader feels that he is trading right next to the price section, when in fact he is taking a position against the direction of the market. This difference makes the traders think that they are in the right market, but the price goes exactly towards their losses, and after their activation, the market returns to its original trend. Now let's press. Smart money wants to execute a heavy push order. The price will start to move upwards. That is, it will break the liquidity and resistance. With this failure, firstly, the stables of those who are focused on resistance will be activated. And secondly, the stables of traders who are waiting for failure will also be activated, and they will enter to buy. Because I think the market of Saudi Arabia has taken over. What is the result? A strong wave of shopping pages enters the market. And this is exactly the opportunity a smartman needed to enter his heavy sales pages without the market noticing. Actually, with the artificial induction of buying in the smart money market, it enters the market, and with the pressure of its own market, the market enters the markdown phase and the price goes down. This is one of the best examples of how smart money uses buy-side liquidity and how this liquidity affects price movement. We can implement the same concept in the liquidity chain with the same logic and the same type of market behavior. Well, let's go to the next topic. Let's see how we can identify the sell side and buy side liquidity through the candlestick patterns and what scenarios we may face in the chart. So far, we have talked about Igual highs and Igual lows, how they came to be known as liquidity zones. Now we are going to focus on swing points, which can be important areas for stability or liquidity chain from the view of candlestick. A swing low is formed when the middle candle has the lowest low in a sequence of candlesticks, and both the left and right candlesticks have the highest low compared to it. What does that mean? That is, in this structure we have a low, on the left side of which there is an ender with a higher low, and on the right side there is another ender with a higher low. As a result, that middle point becomes a valid songlu. It is exactly the opposite for the songs of Sokyumkan. That is, the higher ones that are placed between the two lower candles. But behind this concept, which is logical, well, when a trader has a long buy position in an area, many times he puts stables under the last swing low. And if the sell position is a condition, he will place his strip, usually above the last swings here, which we call the pending sales strips that are waiting to be executed under the swing. Sell side liquidity. And we call the pending purchase orders that are above the songs as well. You have to say something. Chances of these areas are very important in the analysis of the market structure. Because this is exactly what smart money is looking for. He wants to push the price up or down in these areas so that his pending pages are activated and enter the market. By understanding these dynamics well, we can more easily predict possible price movements and make more informed decisions in our trading. Well, now let's go to the real chart and see some examples. Here we have the Euro-USA chart, the 4-hour time frame. Now we are going to identify the swing points on the chart and see how they can act as buy-side zones and liquidity site series. Let's start from this reason and start identifying the latest swing point. First of all, here we have points that have lower points on both sides. That is, we have lower points on the left side and the same on the right side. So this point becomes a point. And above this level, a buy-side liquidity zone is formed. In the same way, we have a low below this level, which is a higher low on the left and right, which means we have a valid swing low, and there is a liquidity side zone right behind it. If we look closely, we can see that the price of another swing point has also made a low, which has lows on both sides. So here we have a new swing low, which becomes another part of the liquidity chain. We can see exactly the price has come and this sell side has swept the recent liquidity. That is, the price has come below that, it has activated its 100 and then it has gone back up. Now, after this area is collected, the price has come to the top of the next low, because here we have another low, which has lows on both sides. So a new liquidity surge has formed. On the other hand, the price has also risen above the previous songs, and that area has collected liquidity on the buy side. And now we have a high with two lower highs around it, which can be used as a new liquidity buy side. Here we have another Levi soaring, which is fixed by the price, and a little above that we see another soaring, which represents another liquidity buy side area, close to the previous one. When two liquidity buy sides are formed close to each other, the previous one becomes even more important and attractive for the market, because the volume of orders may be higher there, and Asmet Money is looking for exactly such orders. Again, here we have another liquidity sweep. As you can see, the price has come and gone below the previous liquidity level. In this period, a new song Levi was also created with a high level below the previous Levi. It has hit and indicates another liquidity chain. Let's continue to wait. We can see that the price entered a strong downward momentum and pushed downwards until it came in the news and swept the recent liquidity chain. Now, if we look carefully, here we have another song, one with two lowers around it, which shows that it is a new area with liquidity on the side. Here we have what we have to consider in our analysis. In the continuation of this price, it fell again and it also calculated a next liquidity chain. And again, we see that a new songlow has been created. That is, a fresh liquidity sell-side has appeared just below this one. Let's go ahead. Another songlow can be seen here too. There are ballers on the left and right, which shows that we have a new liquidity downside that we need to focus on. After that, the price moved down again until it reached the liquidity chain area. As we can see, with this white candle, the price came and swept that liquidity chain as well. Next, we have a Saudi Polak that has pushed the price up towards buy-side liquidity. And in this move, new songs have been created, which means that another liquidity buy-side has appeared on the chart. And the continuation of the story. The price fell once again with power and the continuation of the story. The price fell once again with power, and with this powerful red candle, he calculated the next liquidity chain. Thank you for staying with us until the end of this video. If this video was useful for you, don't forget to subscribe and activate that notice button so that you will be notified when we release a new video. We are always eager to hear your comments and suggestions. So tell us in the comments what topics you want to be covered in the next episodes. Thank you for your support and good luck until the next episode.